Okay, cool. Let's look at a topic that is very much confusing in Forex, in the Forex industry or in the Forex market. Most people get very confused when it comes to top-down analysis. The reason for that is because the charts keep changing on them as they drop down lower to lower time frame. So if they were seeing a bullish structure on higher time frame, and when they drop down, they see a bearish structure, and this can get confusing as they drop time frames. So I'm going to make this clear for you, make you understand it so that you don't get confused in the market. Okay, when you're looking at top-down analysis, you're looking at three phases of the market. You're looking at the high time frame, you're looking at the lower time frame, and you're looking at the high time frame. So high time frame, what are we looking for in a higher time frame? Okay, number one, very important, major support and resistance level. These are the most critical levels in the market. If you're looking at a higher time frame resistance and you compare it to a lower time frame resistance, the one that is most likely to hold strong is the higher time frame resistance. Are the lower time frame resistance irrelevant, or the lower time frame support and resistance level, are they irrelevant? No, they are still relevant, but we project based on the higher time frame. You understand? But we'll talk about this as we make the chart examples so you can get a basic understanding of what I'm talking about. Outlook of the overall market. So this is the other thing we're looking at the higher time frame. We're looking at the outlook of the higher time frame. What is the market doing? Is it a bullish structure? Is it a bearish structure? Is it changing the direction on the higher time frame? Or is it continuing the same direction on the higher time frame? Is it creating patterns on the higher time frame, or is it not? Or is it making creating candlesticks or whatever? What is it doing overall on the higher time frame? This is basically going to determine what is going to happen in the future. Now, because the higher time frame is much more slower, we go down to the lower time frame to take advantage of those entries as the market continues its cycle on the lower time frame. I hope that makes sense, guys, because this topic, I know, it can be very confusing sometimes. If you do have any questions, just make sure that you ask, and practice. The more you practice this, the more it's going to be easy for you to understand. Okay, lower time frame. Which is the lower time frame? Now, let's say, for instance, you were trading on the daily time frame and you did your analysis, everything looked proper. Let's say you saw your buys, or you saw that price was in a specific level. The lower time frame is going to be the second one after that one. So if you're on a daily, you're going to drop down to 4 hour. You understand? If you're in 4 hour, you're going to drop down to 1 hour, and so on. So that's your lower time frame after your higher time frame. So what is it that we're looking for at the second high frame? We're looking for confluence activity. What do we mean by that? We're looking for patterns, candlesticks, change of characters, structure breaks, and retest, and so on and so on. We're also looking for possible entries. So let's say, for instance, price was on a support level on the high time frame. So price dropped down and now it's on a support level. So we can't just enter because we can see it's on a support level, because that could compromise our risk to reward ratio. You understand? And trading on a higher time frame is much more expensive. So if we drop down, we can actually refine this entry and get more confluence about this entry. So going from daily to 4 hour, we now can see what the market is actually doing. So if now that the price is on support, on 4 hour we drop down, we see that price is not just only on support, it's now actually creating a pattern or a reversal pattern, or it's creating a continuation pattern, meaning that the support level is not going to hold. So we let that continuation pattern play out and then find confluence that is going to correlate with what? With the higher time frame. If we saw a buy, we need to wait for a buying structure on the lower time frame before we can take that trade, because what could happen, it could happen that price was just approaching that support, so it can break, retest, continue to the downside. This is why we need to drop down time frames and look at the structure, look at the patterns, look at the candlesticks, look at everything else that we talked about on the basic lessons, on the basic chapter when you guys started off with me. So that's very important. That was very important what I taught you there. I know most people rejected them because they thought they were irrelevant. Now you are seeing the relevance of those. Okay, cool. Now that we've seen what is happening on the lower time frame, now we need to take entries. Can we take entries on the lower time frame? Yes, we can. We can trade. We can take entries depending on our risk, we can. But we can also go down to the entry time frame to actually refine our entries. Now, what is the entry time frame? This is a time frame that we are projecting our trades basically. So whatever we saw here, say for instance, price was in support, and then we dropped down, and we saw that now it's creating a reversal. We know that from support it's going to go to the resistance. And where is that? We project that according to the higher time frame, the resistance of the higher time frame. But we also have resistance levels in the lower time frames. So in this time frame, we are getting in and out of trades in the direction of where the market is going on the higher time frame. Excuse me, guys, I'm not feeling very well today. Okay, cool. So like I said, in this entry time frame, this is where we're going to be looking at our entries. So if it was a buy here, we're going to be looking for buys. We're going to look for break of structure, retest in this time frame, take buys until the higher time frame setup is complete. If it was a flag, we will buy until that flag is complete. If it was on the support level going to resistance, we will buy here until it reaches the resistance on the higher time frame. Structure, we trade this time frame according to the structure of this time frame. You understand? Here we just look at what it's doing. Is it giving us clues of whether this is going to happen? Here we go and execute. We execute every pattern you see here. We go in and out trade. Most people, they like to hold. You understand? They'll hold. Maybe they'll take an entry here, and then they'll hold, expecting this setup, the high time frame setup, to play out. But what happens is the price is going to go into their entry, go to the direction, complete that setup, and then come back to stop them out again before continuing to the upside. So that's why here we enter, we exit. You enter a setup, you trade that setup complete. Once it's complete, you close the trade and wait for another setup, and so on and so on. You don't hold for a long time, you understand, unless you found the best entry in this time frame. Let's say you found a sniper, high time frame sniper entry on the refined time frame here. So you figured that price will never come in this level. Then you can hold. But keep in mind that market will spike. There are news events in the Forex market and so on and so on. You can only relax when you are trading synthetics. Synthetics are, I feel like they're much easier to trade because you don't have to deal with these unnecessary spikes that you don't know about. Yeah, I think that's it. No, it's not it actually. You know, when you're trading this time frame, this entry time frame, you must not limit yourself to this time frame. This entry time frame can be refined. You can drop down to lower time frames. Let's say this was a 1 hour, you can drop down to 15 minutes or 30 minutes or 5 minutes or 1 minute, 3 minutes, whichever time frame, just to get a clear perspective of what you are looking at. But you get to understand the process of refining as you get more experience. But if I was to give it to you in a nutshell, basically what you're doing here, if you want to drop, let's say you are in this time frame and you're noticing that price now in this time frame is approaching your entry level. Let's say it's a buy. So now price is now going down, you understand, to the level that you want to buy in. You understand? So what you do, you drop down to lower time frame, you see what setups are being what patterns are forming, or whatever setup is forming on the lower time frame. And let's say you see patterns or setups that are pointing to the better side. If you want to scalp those entries, you can now scalp those entries until they get to the required place where you want to enter this entry time frame trade. If you wanted to buy, you can sell it on the lower time frame until it gets to that level. Then you start buying on the entry time frame, projecting with the above. I'm sure this makes sense. Now I want to talk to you about distinguishing. Now that this guys basically is the most important one. Like if you understand this section here, then you're good to go. But I'm just going to give you a framework on how to actually identify these time frames and how to distinguish based on the type of style you're trading, like how to distinguish how to distinguish these time frames. If you're a swing trader, day trader, scalper, all those things, we'll talk about them now. Let's talk about them now actually. Okay, cool. So now you're probably wondering, like, which time frame should you use for your specific style of trading. That is up to you guys. If you are someone that likes to hold trades for a long time, you would consider yourself as a position trader, or as we like to call it, a swing trader. Swing traders are people that like to hold long trades, you understand? So they like to trade on the higher time frames, and they like to make big profits over a long period of time. So if you are a swing trader, you are most likely going to, or you are not most likely, you will okay, wait, before I carry on, I need to make something clear. Sorry about that. I'm going to get back to this just now. When you're a trader, it doesn't matter when you're a swing trader, day trader, scalp trader, you need to understand the overall structure of the market. So in other words, whether you are trading on the small time frame, higher time frame, you need to know what is the market doing at a specific time. You understand how is the structure looking, and the best way to do that, you need to go and see on the higher time frame, possibly the highest you can go up to, you understand, but I prefer going up to the weekly, you understand. See what the market is doing. Is the market going up? Is the market going down? Is this a bullish or bearish trending market? What type of a market am I trending? You understand. Once you understand that type of the market in which you are trading, you can now go down to lower time frames and actually start trading whichever style you want to trade, while knowing the overall direction of the trade. Okay, cool. Now we have that out of the way. Let's get back to this. So if you're a swing trader, you use your higher time frame. HTF means lower time frame. HTF means higher time frame. Sorry about that. LTF means lower time frame. ETF means entry time frame. So for your higher time frame analysis, you as a swing trader, you will be looking at a weekly or a daily. So that's if you're swinging. For your lower time frame analysis, you'll be looking at the 4 hours. So this is where the chart is actually going to show you what it's doing. It's going to show you those patterns. It's going to show you whatever those structural breaks, change of characters, all those things you will see here. And this will be your entry time frame. This is where you'll be finding all your entries and all your setups moving in an upwards direction or the downwards direction, determined on what the higher time frame is dictating at that time. You understand? So as a day trader now, what is a day trader? It says day. A day trader is someone that holds trades for a day, doesn't hold them overnight. So if you want to go into the market and then exit before you leave, you don't want to trade, or you don't want to hold trades overnight, this would be you. You'd be a day trader. Maybe you'll hold one position and let that position run for the whole day, or let that one setup run for the whole day. That you would be considered as a day trader. So you want to take profits at the end of each day. And for you, you'll be considered, you will be considering this 4 hour as the higher time frame, and then you'll be considering the 1 hour as your lower time frame, and your entry will be the 15-minute time frame. The reason for this is because 15-minute trades normally last you the whole day. Sometimes they can last longer, guys. Sometimes they can be very quick. It could feel like a scalping trade, even though it's a day trading trade, you understand. So these are the time frames you'll be looking at as a day trader. Now, a scalping trader, what is a scalping trader? A scalping trader is one of those people that want to get in and out of the market, in and out. They want to make small profits. It's mostly the people who like to stay on the charts, who look for setups, lower time frames, take those setups, exit those setups, come back, look at those setups again, look for other setups, you understand? So the whole day you'll be consistently going back and forth in your chart looking for setups or taking trading setups as a scalping trader. So this will be you, and your higher time frame will be a 15-minute time frame, and your entry time frame will be a 5-minute time frame, and your lower time frame, your lower time frame will be a 5-minute time frame, and your entry time frame will be your 1-minute time frame. You understand? So here is a type of person that likes to get in and out. He wants to be on the charts the whole day, probably doesn't have much to do, just chilling on the charts and playing with the charts, or he enjoys the chart so much that he'll rather spend the whole day looking at the chart. Day trader, someone that's working, wants to open a trade maybe in London session, when comes back from work, check maybe New York session, London session, but by the time they go to sleep, they're closing trades. So they're not really on the charts all the time, they're just monitoring and managing the trades. Swing trader is someone that's a very busy person. People like me, you find once you find that one entry, you hold the trade for 2 weeks because you're busy with other things. And then by the end of 2 weeks, 1 week, or even more, or even longer, your trading setup is complete while you are busy with other things. You're not really focused on the chart. So this is the different type of traders, and these are the different type of time frames that you should consider in regards to whatever it is style that you are trading. Okay, cool. I hope this is clear, guys. Remember, ask questions. If something is not clear, ask questions, go and practice, and this is how you gain experience. And the more you practice, the quicker you actually become profitable in the market. Okay, now we are going to jump onto the chart. On the chart, we're basically going to do some top-down analysis and basically break down the strategies we are using here at ILM Digital. So yeah, guys, let's jump straight onto the charts. Okay, cool, guys. For top-down analysis, like I said before, I advise anyone who's trading any time frame or any type of trader, scalper, position trader, day trader, whatever trader you are, this is the first time frame I would need you to first consider. So you can see the overall structure of the market. As you can see, this was impulsing, going down. Now it's basically a bearish structure, because now you can see that the market is doing what? Low lows. You see it didn't break this previous high, so now we expect it to come back to this low here. So it's a basic it's a bearish setup as we're looking at it. So the previous level of structure on the higher time frame, this is just a basic outlook, guys. You most probably do your analysis on the weekly time frame, but I just like to go to the highest time frame just to see. Maybe especially when I'm starting, it's my first time trading that currency pair. I want to have an overall understanding of what it is that I'm getting myself into. So as you can see here, this is the level of structure. Price did bounce off here. No one, you see here, it had a rejection, breakout, rejection, break. You see now it's rejecting again. So now that it rejected here, I expect it to come here. And I'm also noticing another thing on this higher time frame. I'm also noticing one thing. I can see that there's a channel that's also being formed here. It's a channel, and this channel is incomplete. So now price comes from a resistance and it's on its way to approach support. So what am I expecting? I'm expecting price to at least reach these levels here. You understand? So this is my outlook of the higher time frame. Do I think this is going to happen now when I'm trading on the lower time frame? No, this is never going to happen here, but my understanding of this market would be clear, because now I know where the market is headed. You understand? Because there's an area of resistance here, there's a previous pivot point here. So now price can either reject on this resistance before going out, before going up, can come to retest this support here, or this thing can also break and come and retest here. It does have a potential of breaking, because this here looks something like a flag. It's an impulse, it's a correction. Now it's coming back down. You understand? We know it didn't reach the order block where we might have taken a nice sniper entry, but at the end of the day, price did react on what? On an area of structure. You understand? So there is a high chance that this thing can break, retest, and come down. So if it does that, I don't know what's going to happen with the what's this? The US currency. It's going to be weak as hell, and we all know that the US does not like to lose. So it means that it will be losing against Russia, and we don't know what they can do. Fundamental wise, those guys can start a war, but we don't know. Let's not assume things that we don't know. So we move down to the monthly time frame, a more logical time frame, because now we can see the entire perspective and things are much clearer to us now. Okay, cool. There's a support, yes. Boom, it's going down, hasn't reached that area. Okay, cool. You can see what's actually happening. I hope we're together, né? But if you did not take part in my basic lessons and you wanted to jump onto this one, trust me, you will not follow proper.
So you'll have to go back and start over. So cool. Now we're seeing this channel is going down, it's going down. Okay, now let's go to the time frame that we normally start analyzing at, which is a weekly time frame. So now weekly time frame is basically going to show us the output or the perspective in which we need to start placing what our support and resistance levels, because these are the areas that are going to be strong. Where's price now? Looking at this area here. Wait, did I miss that? Okay, cool. So looking at this area here, price bounced off and went up. Now price came back to bounce off again and went up. Rejected in this level here. Rejected in this level here. And now we can see that, no man, this looks something like a head and shoulders. But here's the problem. This area has not been broken yet. So until this area has been broken and retested, we can confirm this is a valid head and shoulders, and then we will write it down to the support that we're looking at the higher time frame. You see the massive potential that we have here if this thing oh, excuse me guys, let me drink some water. The massive potential that we have here if this thing breaks below. That's a massive potential of profits that we might have here. So now we're looking at this zone here. If we pull this thing here, what are we going to notice? Support and resistance structure right there. You see, price rejected there, rejects, supports. Now we don't know if it's supporting or rejecting, but we will know this what is happening here when we drop down the time frame. So okay, now the weekly time frame showed us a bit of a perspective of what is happening. Let's see what the daily time frame has to say about this whole thing. Guys, this is top-down analysis, and I'm basically walking you through on how you should look at these things when you are doing top-down analysis. Because top-down analysis has to confuse some people and they don't understand how to look at things. So now what are we seeing now? Things are a bit clear. It is a head and shoulders, but it has not broken it. So, okay, cool. Where's price at? Okay, this is a retest. This is another retest. But it was not an impulsive move to the upside. It did move up, but it did not break. It showed change of characters and all these other things. But it's a higher time frame and it's a head and shoulders, keep in mind. So you might expect a drop anytime. Okay, cool. We see this thing that's going down here. It looks like it's consolidating. Is it a flag? Is it a falling wedge? What is it? Is it a reversal pattern? Is it going to reverse? What's going to happen? Okay, cool. Now we drop down to 4-hour time frame because we want to see this area now in a clear perspective. Is this creating reversal patterns? Is this creating continuation patterns? 4-hour time frame. Let's go. Cool. Now we see this area much clearer. And guess what we are seeing? It looks like a running channel, like a falling channel. I missed it. Let's see. What's going on? What are you doing, price action? Okay, cool. It looks like a falling channel. And guess where's that falling channel? At an area of what? An area of support. Fell, boom, through this area, retested the support, went back up, but did not mitigate this area here. It was supposed to go up, but somehow price seemed to be dropping. Okay, why is price dropping in this level before it reaches this level here? Is there a level of structure that's been tested here? It looks like there is. Let's mark it off then if there is, so that we can see when we drop down to lower time frame. Because now this is a lower time frame. Now we're going to drop down to our entry time frame. Remember what I said about the entry time frame? This is where you project all your entries through the direction of the higher time frame. So which higher time frame are we going to project the direction? Is it the daily? Is it the weekly? It will depend on the setups that form. You understand? Because at the end of the day, these trends will not last. They will change. So let's say this is an area of support here. I mean resistance. Okay, cool. So now we can see clearly what's happening with price. It's resisting at this area. Okay. Now we understand. We know it needs to come here. If it does break this level, it will have to retest and move to 90% capacity or to that level up there, which is a weekly level, before it moves down. Cool. Now we know that. Now let's move to the lower time frame, the 1 hour time frame. 1 hour time frame, now we're looking for patterns that are going to show us the direction in which we need to trade. We know the overall setup of this whole thing is bearish, but it's on a supporting level, which is a high time frame support level, so it needs to move to the upwards direction. But momentum is pushing it to the downside. Keep that in mind. But we're seeing now change of characters. We're seeing all these right things that are pointing us to the upwards direction. So now we need to trade accordingly because we know where price is coming from. It's coming from support. Okay, cool. Let's see. Do we have any lower time frame support areas? Looks like we do in this level. Let's see. Okay, put it here because this looks very interesting for me. Bounced, 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 created a head and shoulders which was respected. You see this head and shoulders. Impulse, shoulder, neckline, neckline. This is the head here. And boom. Okay, that's a valid area. So now price is here. Between these two levels, price is here. So now price can either continue to the upside or price can either move to the downside. And looking at this here, where are my lines now? I need a trend line. Okay, this here is also a trend that is actually forming here. As you can see, price is now creating something that looks like this. So what is this? This is support. This is support. This here is resistance, and price needs to come and mitigate here. You understand? Did it mitigate in this area? Let's see. Here's another thing we need to look at. I forgot to look at this one here. This area here. This is a previous high. And look at what happened when price got to that previous high. Do you see what happened? It rejected rapidly and came back down again. So this is now creating something that's starting to look like a what? A triangle. You understand? Now it's a triangle. So things are starting to be a bit confusing. But say for instance I wanted to push things and trade this thing. How would I go about trading this thing here? Okay, let me remove this area of support here, guys. So that I can see this triangle clearly. So now we're on 1 hour. Remember I told you that your entry time frame can be refined also. So you can drop if you're seeing things like this that are not clear. Like me, I like to see patterns, I like to see other things. Now I'm seeing a 1 hour candlestick that is creating a pin bar, indicating to me that it needs to move to the upside to come and mitigate. Now this is a triangle. So one thing can happen, it can either break impulse to the downside and continue with the bearish momentum of the higher time frame, or it can break and then continue to go mitigate the 90% capacity of this overall falling channel. So we're stuck in that position now. So what other clues can I have here? I'm going to the 15-minute time frame now because I see here they are hiding things from me. They're not showing me too much. Okay, cool. Now I'm seeing that this is an M formation before it broke. So what happens after M formation? Price comes back to mitigate. So it might come back to mitigate these levels here, or this level here, or this level here, before it comes back down again. So when am I going to see a break? I don't know. So now price is continuing to the upside. We drop down time frames again. This is now refining the entries. At this moment, we would have waited. Okay, cool. Now I can see where I can enter. 5-minute time frame, a W formation. I can trade from this level to that level. So what am I going to wait? I'm going to wait for the retest of this level here. So after this thing breaks, once it retests here, I take a buy. I place my stop loss here up until this level. So voila, top-down analysis, I ended up finding an entry. Sometimes I was actually worried now I was not going to find an entry. Because sometimes you end up not finding these entries because you are not always going to be trading, guys. And that's where most traders fail in the industry. Like me, for instance, I don't think I would have taken this trade here because of the risk. But, oh, it's 5 minutes. At least it's 5 minutes. So yeah, I would have taken something like this and take profit would be here on that resistance line, either on that resistance line or here on the neckline. But I'll never take profits here because now that will be like a one-to-one, and for me that doesn't work. Me, I like to trade trades that look something like this. You understand? I like to have very small risk and huge reward. So for me, this trade would have been nice if I found it here. This would have been the best one for me, and I would be in profit right now. So this is basically how you look at top-down analysis. You understand, guys? If I'm to summarize this thing for you guys, you go to higher time frame, understand the direction, look at what the market is doing. It will be of benefit if you understood the fundamentals of the market, but at the end of the day, the fundamentals will reflect on the technicals. You understand? So once you understand the entire the overall direction of the trend, okay, wait. Okay, never mind. I was about to, okay, we can actually adjust this take profit, because now if I take that entry from there, I'll take my profit somewhere here. But because I took these entries on a 5 minute, I'll have to take profits on that 5 minute and then look for other entries on that 5 minutes. So as I was saying, guys, looking at it overall from the higher time frame, you understand the structure. What is this market doing? Is it a bearish? Is it a consolidating market? Is it a bullish market? Does it have impulsive move? Is it active? Like, am I making money here? Once you understand the overall, you start dropping down to your time frames where you want to start your analysis. Now, for instance, if you want to start your analysis on the weekly time frame, guess what you do? You place your support and resistance on that weekly time frame. If you're seeing patterns on that weekly time frame, you acknowledge those patterns and consider your entries from those patterns. So if it's a flag that you want to trade, you know that with trade flags, when they reach retest of a broken structure, you know that the only time you will enter a buy on that higher time frame is if the confluence on the lower time frame is indicating or showing signs that it wants to move in the direction of that higher time frame pattern. You understand? Or if you don't see patterns on the higher time frame, you're just seeing support and you're seeing resistance, and then price is on the support or is on the resistance, you drop down and see on the lower time frame which patterns are actually showing me that now that we're in support, price is actually going to be supported and move up. Which patterns are telling me that? Now that we're on resistance, which patterns are actually showing me that now we are going to actually move to the downwards direction? So this is the purpose of actually dropping down to lower time frames to look for entries, because you know where price is at the current moment. You know exactly where price is. You expect it to do something, but you don't know if it's going to do it or not. So you drop down to lower time frame to see these patterns forming, confirming that yes, what I saw on the higher time frames is actually going to happen. So on these entry time frames, I'll look for certain patterns and act accordingly. So I hope you understand, guys. I hope this is clear. Most people actually fail in this part of top-down analysis because the patterns, they confuse them. As you drop down to lower time frame, it becomes different. It shows you something else. You see a buy, you see a sell. Like you saw here, what we were doing, we were seeing different things, but we know the overall objective of what we're doing. Yes, you can see buys on the selling structure high time frame. Yes, you can take those buys on the lower time frame. But all that you are doing is all about the level of structure, where price is. That's why it's better to trade when price is on a significant level on a higher time frame. See, if you're on a higher time frame and you see that price is on support or resistance, it's very wise to drop down to lower time frame and look for confluences. Not trading in the middle of nowhere, because you'll find yourself making confusing decisions, because now price is between support and resistance, and then now you're going to have to drop down to lower time frame and make decisions according to lower time frames when the impulses are dictated by higher time frame. So remember, buy low, sell high. That's what I mean by that. I mean buy when price is on support on the higher time frame, when the lower time frame confluences are green with the higher time frame. Sell when price is on the resistance on the higher time frame, and drop down to see if the lower time frame is confluencing with the what? With the higher time frame, showing you signs that it wants to go down. I don't want to talk too much, guys. I mean, this has been the longest lesson I've ever made. I normally make 10 minutes. This is like 18 minutes just discussing the charts. But yeah, guys, that's it for me today. I'll see you on the next lesson.